excited to see the majority of panelists and the speakers and moderators and all the attendees to be joining. Thank you so much, everyone, for being so on time. Um, we're gonna start, I think, right now, and then people will be just coming in. Because before welcoming all the speakers today and kind of guiding into the discussion, I wanted to share a little bit about Accion Venture Lab, what do we do, and kind of how we look at the agri-fintech, what's kind of in our agenda. And it will be presented by my colleague Dev, the director at Accion Venture Lab. And then we will going to dive into the discussion with our amazing speakers today. Uh, Before that, Accion Venture Lab, just for those who probably haven't heard about us or about our activities. So Accion Venture Lab is a leading early stage investor in inclusive fintech. It's an investment strategy of Accion. We invest in emerging markets. We invest globally and in the most innovative models and technologies that are delivering financial services to underserved communities. So we started to invest back in 2012. And up to date, we have 75 investments made in close to 40 countries. It's been an amazing journey. We are, of course, searching for financial returns, but also very much care about the impact. Apart from that, just to highlight, we did more than 100 portfolio engagement projects with the companies we invest in. It's kind of an amazing work that part of our team is doing on site right after we invest into the company. They go and work with the businesses full hands-on. So just in the nutshell, we provide seed-first capital and strategic support through portfolio engagement to help our companies succeed. And just to show you how global the portfolio of fintech innovators we have. So as I mentioned, we invested in 70 plus companies across the world in emerging markets, Latin America, Africa, South Asia, Southeast Asia, but also in the US. And today you will hear from the part of agri-fintech companies in our portfolio who are already here on the webinar with us. Prior to that, I'm just going to give a quick word to my colleague Dev, who is joining us from India. By the way, I forgot to mention who am I for also those who don't know. My name is Eugenia. I'm a head of community at Accion Venture Lab. So excited to kind of set the tone here before we dive into the discussion. And without further ado, please, Dev, the virtual floor is yours.
Sure. Thanks, Eugenia. Welcome everybody, and welcome Avi, Ben, Valentina, Pavan. Very excited to have you all on the call today. I guess first like to start by spending a couple of minutes sharing how we at the fund really think about embedded finance in the agri ecosystem, right? First, there are a variety of stakeholders who participate in the agricultural value chain, right? Many of our audience would already be knowing this, starting from upstream players such as agri input manufacturers and stockists to all the way downstream players such as farmers and off-takers, right? We are particularly excited about models that optimize transactions, both among these stakeholders and within each stakeholder group. For example, this could include marketplaces that enable seamless transactions between input retailers and stockists, or it could also manifest in a way of IoT plus SaaS deployments that help farmers monitor crop health and optimize their output, right? Where it gets super interesting for us is when fintech gets embedded onto these platforms to power the transaction layer, right? This could take the form of lending, helping retailers finance purchases from the marketplace, or embedded insurance, enabling farmers to subscribe to insurance while paying for their IoT or SaaS subscription service, right? We have seen that embedding financial services at the point of transaction makes the most intuitive sense. Not only does it solve the core need for access and usage of financial services, but it also delivers several benefits to both customers and businesses, right? The core business. For example, for customers, Embedded finance can improve access to productive capital, boost income, and enhance profitability through higher quality inputs. It can also reduce losses and improve crop resilience amid increasingly predictable climatic patterns, as we are seeing. For the core business fundamentals, we have seen that it can drive average order value, or what we, in other words, the transaction values, capture a larger share of customer spend, and improve retention by creating a formal financial history, which over time makes the financial products like credit more affordable for the end user. We are joined today by some of our amazing founders who are building successful agri-tech platforms with embedded finance across different parts of the world. So without further ado, let's hear from them directly. Welcome, Ben, Avi, and Valentina, and Pavan again. And perhaps, Ben, I'd like to start with you. A request to all of you, as each of you speak for the first time, please also take a moment to introduce your company. That would be like the formal introduction to, all our participants. So, Ben, maybe the first question to you is, what really motivated you to embed fintech in your business, and how has it helped the farmers and Apollo's core business since you have started embedding financial services?
Thank you so much, Loy, and thanks everyone. Happy to be here today. So at Apollo Agriculture, we help small-scale farmers in Africa to maximize their profits and productivity. And how we do this is by providing farmers with everything they need to succeed. So if at all you are a farmer, we'll be able to give you high-quality seeds, we'll give you high-quality fertilizer. We also bundle agronomy or extension to just make sure that you can be able to improve on your agronomy practices. But also, we also add insurance. Just in case of a bad season, you'll be able to get compensation from the insurance company. But also, we also embed financing. And that is super important because that enables the farmers to be able to access all those inputs when they are planting, and then they can be able to pay slowly over the season and be able to complete their loan at the end once they have been able to produce and sold the produce to make money. So that has been working well. We have been able to finance over 400,000 farmers to date with a loan portfolio of around $85 million across Kenya and Zambia. And we have seen successes from our from the farmer side, Loy. In a case, everyone knows that access to credit for smallholder farmers is a big challenge. And it has remained to be a big challenge because smallholder farmers are very rural, they are fragmented, they lack formal credit histories, they don't have collateral, they don't have traditional banking services. I usually say you can't walk into a farmer's home and ask for a balance sheet or a P&L. So, and that has made credit access for them difficult, but also we know affordability for smallholder farmers is hard. For now, like the solutions are known. Farmers need fertilizer, they need high quality seeds, and once they access these tools, they're able to double or triple their production. But the problem is that if they can't afford it, they won't be able to uptake the new technology. And that is why like adding financing into our model and making sure that we are packaging all these products that the farmer needs to be able to succeed in one package is super powerful, and adding financing on it really helps that farmer to be able to consume that or either to be able to take up that package, and they can be able to maximize their profits and productivity. But also even from, and we have already seen, like once farmers are able to get the bundle and the financing, they're almost doubling or tripling their production in a season. And that really helps them to make more money, they can be able to repay well. Because I usually say, like, if you don't add the financing, it will be hard for you if at all you give the inputs and maybe the farmers can't be able to afford, or either they afford part of the inputs and then they can't be able to afford others. I give you an example, like Zambia last year, there was a bad drought. If at all we did have insurance embedded in the package, it could have been tough for those farmers. And because of the financing, it makes it even easier for farmers to be able to even pay for that insurance, because we are able to pre-finance and then they can pay slowly until they are able to harvest. On the side of the business, having financing, you're able to do more transactions with the farmers. Farmers can come back the second season because they still need financing for their inputs. But also, you're also able to earn margins on the financing side. So I think that has been our experience, and it has really been going very well for our customers.
Got it. Got it. That's super insightful. And that benchmark of about 2 to 3 times productivity because of financing and access to quality tools and inputs is a phenomenal benchmark to have. Maybe that's a great segue for us, to think about farmer purchase financing to move from Africa to another country, and specifically Mexico, and move to Valentina. Valentina, could you perhaps tell us, more about, the challenges that farmers face in Mexico, and how you guys are leveraging financial services as a tool to solve these problems, just dovetailing from what Ben discussed right now.
Sure. In Verqor, what we do is to give cashless credits so that farmers can purchase all the inputs they need in the fields, like fertilizers, organic products, agrochemicals, irrigation systems. So everything they need, they could purchase through our catalog, and all that is financed. The credit is 100% digital. All the process is digital, and the farmers do not get the money; they get the inputs. So this way we mitigate the risks of lending in agri sector. And adding a bit to what Benjamin have been mentioning, because I think there are some problems that we can find in common and some challenges that we can find in common for the markets. Like the industry is quite informal, so it's very hard to evaluate the real paying capacity of the farmer when there is no data, when farmers, for example, selling cash, like there is no traceability of financial flows. The traditional financial institutions in general consider it very risky to lend in agro. In Mexico, we also face extreme weather conditions in many states of the Republic. As well, they lack collateral to live as a condition for traditional financial institutions. And well, the procedures are so complex so that farmers cannot fulfill them, right? So I think that's something like in common that we can see in various markets across the world. But focusing specifically on the challenges that like we have seen in Mexico, like especially in Mexico, like the banking system is really inefficient, but for all the segments. Like personally this week I had to go to a bank because like in a certain office of the bank where I opened an account like 5 years ago, just because a bank assigned me like 2 client numbers and I really couldn't solve it like by phone or online. So when we speak about or when we speak about asking a credit card, like that's the same. Like you have to go to bank and put like a request for that, and like a lot of processes that you have to do kind of in person and going and to the bank. But of course, when we imagine the remote areas where farmers live, that's very complex for them to do. So imagine how is the process for asking a credit of like $50,000 or more, the credit that would allow farmers to cover the needs. And here we speak about this size of the ticket of the credit, because also something specific for Mexico is that the farmers are not so segmented and not so fragmented. Sorry, they are quite big. The land that they have, because they work usually as a family cluster. So if we offer them something like a microcredit or amounts that won't satisfy their need for the field they have, probably they would still opt for the option of informal credit that can give them this amount. Finally, the last two financial institutions that were existing in Mexico and focusing, attending only exclusively agro sector, they were eliminated. One was of government that was shut down, and one was just bought for a license by a neobank. So the opportunity is really big, and that's why why we see a lot of potential in what we're doing. But as well, I think the difference between market as India, for example, is that in Mexico, all the agro inputs, 80% of the agro inputs are imported. So it makes them very expensive. So they need, and there is no any subsidy at scale to support farmers to purchase the inputs. So basically, that's a bit of common and common things and differentiators that I would like to mention.
Thanks, Valentina. Maybe Valentina, back to you for could you also perhaps share with your audiences how how Verqor also bundles insurance along with lending, and how that has helped bring some customers who are like completely new to insurance into the fold.
Yeah, sure. So farmers are reluctant to hire insurance because basically they don't believe that it can like help, and they don't believe it will pay in the case of the some weather extreme weather condition. So each credit that we give has part of the credit is used to finance the insurance. So all the credit have insurance for weather risks, and that improve the climate resilience of the farmers because in case the insurance is applied, it's not only for paying Verqor, but it's like for saving the total income of the farmer that can be completely lost in a cycle with drought or flood or extreme heat. So our farmers have been finding it like a real like tool to protect their incomes in a medium and long term.
Got it. Got it. That's super helpful, Valentina. Thank you. Uh, Maybe like moving from Verqor, which was born financial services first as a company, moving to the other end of the spectrum, right? And looking at AGRIM, Avi, looking at you, Avi, you decided to wait till a certain scale, before starting to think about embedding finance on your marketplace, right, for your customer base of input retailers. Could you perhaps like share with us, how you think about really kind of like right timing the introduction of financing on a B2B marketplace in the agri-tech space?
Sure, Dev. First of all, thank you for having me, guys. Very happy to be here. And, great insights from Benjamin and Valentina. On our side, briefly about Agrim, we operate B2B platform for agriculture input retailers across the country. Agriculture inputs is, of course, a fairly large industry in India. It happens to be the third largest retail chain behind FMCG and construction. It's about 70 to $100 billion sort of market. The supply chain is very fragmented. It takes anywhere between 5 to 6 hand exchanges for inputs to reach from manufacturers to the farmers. So that is the problem statement that we wanted to solve. And agriculture input retailers in India happen to act as quote unquote doctors who are or advisors to the farmers. So in our endeavor of making an impact in this sector, we chose to help out and be a one-stop shop for all the agri input retailers in the country. Um, in specifically addressing the question, Dave, that you're asking. So at Agrim, we did decide to wait before embedding any kind of financing in our marketplace products. I don't know how prescriptive it can be to other agri marketplaces, because the answer to this is mostly inward looking. But I think the first and foremost principle that we were able to understand about our agri input market, specifically when it pertains to B2B, is that a lot of purchases were already happening in cash. So while it represented only a portion of the overall market, we were happy to be a participant in that portion initially, because it allowed us to stay light, focus on the core problem of the retailers, which is to give them a wide assortment of products at competitive pricing, and offer some of the services which e-commerce companies offer, including doorstep delivery, pre-sales, post-sales support. So it allowed us to maximize our resources towards one problem. um, But we never thought of this, or financing in our mind, was always on the table. We also struggle in this country with the problem where the financing that an agri input retailer needs is not typically something which is very attractive to banks or formal credit institutions. So it made sense. This informal credit giving to agri input retailer was happening already, even without us. And we wanted to play a part in that. And when we went deep into the ecosystem, we understood that, as some of my previous participants also shared, it is hard to underwrite these people because the data that is required to underwrite them does not exist. Nobody's willing to do the hard work to go and visit these shops because the credit lines are not big enough for them to do the hard work. So we needed a technology-based solution to underwrite these people, and for that we needed the transaction data on our platform, which meant that we needed to kickstart certain transactions on the platform first before being able to bring credible partners who can give out financing solutions to our customers. Uh, so we waited about a couple of years to build a critical mass of customers on the platform, build their transaction history, and then get credible partners into the ecosystem who are able to underwrite. The net result of that activity, when we last measured, was about 50% of the customers who we opened credit lines to were taking formal credit lines for the first time in their lifetime. So that tells you that there is a need for the product. And as I said, right, I don't have a prescriptive answer on how long you should wait, but these are the points which helped us or helped shape our journey and delay launching of the embedded financing product.
Got it. Okay, thanks for that. Super insightful. And I'll come back to some of those key takeaways from what you had to say. But moving to Pavan. Pavan, I know you were in the field, and thanks for making it in time for the
Sure.
call. Pavan, you have lending as well as insurance embedded on your platform, right, on AquaExchange. Could you perhaps share with us how this has impacted the income and resilience of the farmers that you serve?
Sure, Dave. First of all, thank you so much for having me on this to join the panelists here. Thank you. And hello, everyone. I'm Pavan. I'm the founder CEO for AquaExchange. We are an aqua tech company with a farmer first approach. We are based out of India, and we actually serve the full stack needs of aquaculture farmers. When I say aquaculture, I'm talking about the inland growing of seafood like shrimp, crustaceans, or fish, etc. And it's a large segment, and it is a mainstay for almost 20 million people across the world. Aquaculture is the mainstay for and their livelihood for so many people. And the reason why we had to come into this in the first place is because it was completely unstructured activity right across the value chain, right from farming layer to the input suppliers to farmers to the dealers, and in many cases, even the end consumers like the processors. And for the past 35, 40 years, if we just understood the way this particular aquaculture shaped up, we see a lot of change across the world, but the way aquaculture is done has remained the same, right? In most geographies, basically. So given that, we started looking at this particular segment with interest, trying to first solve farmer problems because it was too complex for us to kind of get in one go. When we initially try to understand the problem statement, we realized that the farmers' needs were in three main buckets, right? One, as what we call the farming problems, right? For example, if I want to become a farmer or I'm already a farmer, I'll kind of face 1,000 issues in my farming alone just to get a good crop at a good yield and at low cost, for example, right? And whatever it takes, and that could be the animal biology, it could be the operations, everything is part of the farming bucket. That's what we see. The second bucket of problems, let's say by a magic bullet that a farmer is able to really do exceedingly well in terms of the farming. The other problem that faces the farmers is like how my co-panelists kind of observed till now. It's all about access to finance and also risk management. right? For example, if anybody wants to start any venture, for example, the first thing they would do is create a nice business plan and reach out to a financial institute for the initial support. However, aquaculture, and I think in general agriculture, is kind of it's very challenging basically to secure a loan. Especially in aquaculture, it was not present at all, where no bank would be forthcoming to offer a loan to these farmers. Now, the moment we say no bank would be forthcoming, is there no need? Definitely, there is a need. For example, in a country like India, in fact, the government of India has been working with the banks for the past 8 to 9 years continuously just to make it happen. However, there is a big gap, and that gap is the transparency into the sector. For example, if a farmer lending institution has to offer a loan, they would definitely need to understand what is happening at the ground level, and especially when it's a collateral free loan. And this is agricultural loan, it's a collateral free loan that the farmers would need. The need is collateral free loan. Given that, and so the loan is being given for the shrimp. For example, the farmer is growing shrimp and applying for a loan. The loan is actually being given for the shrimp. There's no other collateral. And in that situation, how can a bank work without any visibility into what's happening in the pond, right? That was the challenge. Now, along with financing, the insurance was also our risk management, comes in the form of insurance, was also a very big challenge, especially what we call disease insurance. Because typically, when we speak of insurance and agri insurance, we speak of parametric insurance, right? Where our natural calamity insurance, wherein it's related to the natural calamities. However, if we understand the risk events in shrimp farming, for example, we notice that about 95 to 96% of the events are not related to weather events. It's all related to what happens in the pond with the health of the animal, basically, right? So from that perspective also, there was a separate need for this class of farmers from a risk management perspective also, which was completely unmet. There was no insurance company which was offering this segment. This is what falls to the bucket of the financing and risk management segment. And even by another magic bullet, if all these problems were solved also, I think the final bucket for the farmers is market linkage, right? Because it's a completely fragmented ecosystem where the farming ecosystem is completely away from the final consumers. Because in many agri kind of asset classes, if we notice, the consumers, the producers and the consumers are typically geographically at least close by. However, if you look at something like a shrimp, and in most geographies where shrimp is actually grown, it is all an export-oriented kind of commodity. Especially the case in India, where 96% of the entire shrimp produced in India is exported out, right? Now, look at the situation where this great producers and exporters who are producing for exports are there in India, but they have no clue what the requirements of the end customers are. The likes of the Walmarts of the world, the Aldis of the world, the Sam's Clubs of the world, right? They don't know what they need. And this kind of, let's see, asymmetry in the needs and kind of the information here was also hurting the entire ecosystem. So these are the problem statement in short, 3 problems: farming problems, financing and risk management, and market linkage. So again, Dave, I think we've also taken a similar path like our co-panelists here, wherein everything was linked to each other. When we looked at these problems, everything was linked to each other. So we started with the technology part, where we started solving farmer problems. And the end goal was to increase the success rate of farming. The farmer could kind of, cultivate in a better way than before we started. For us, the job was done. And percent actually. So from that to now 84% for a farmer is a big win from that perspective. So that's what technology can actually do to the small farmer. And along with that, now this technology has also brought in the necessary visibility into this farming. So today, banks are able to use the platform that was built around this technology to actually get visibility into what's happening in the pond. And using that as a base, they're also able to give loans. So the original problem of this being unbankable segment has also been solved, right? And the last and most important thing in this financing piece was the insurance. Again, had to really work with insurance companies to create awareness regarding the needs of these farmers. But happy to share today that using the same technology piece today, insurance companies are offering policies right now, insurance policies, and they're also offering disease insurance policies. And the most proud thing for us is that in the last 6 months, more than 85 farmers have actually claimed for diseases in their ponds. So their weather was completely okay. There was no rains, there were no floods, there were no kind of, let's say, droughts there. However, purely because their pond was affected by a disease, they could claim for it and they got their claim settled. So that also is a big win for the farmers. Now, the reason why this is important is because there is extreme volatility in this particular culture. For example, if you take any other agri-asset class, you as a farmer, your reaction time is at least in a few days to a week kind of a mode. If you find something wrong in your crop, you have at least a few days to a week. But the culture that these farmers take up in aquaculture, it is actually at a few hours kind of a notice. Things change at a few hours notice. And when something is so kind of risky, and if there is no kind of, let's say, safety net, what happens is these small farmers, these 2 acre, 3 acre farmers who actually get into that, and if God forbid something unforeseen happens to them, they actually cannot recover from it. And in fact, they get into a debt trap because of that. Why a debt trap? Because they were getting their earlier financing from local dealers, right? And if they cannot repay it because they lost everything, they are now stuck with the dealer and they're forced to kind of listen to the dealer in terms of the choices of inputs, in terms of the culture, in terms of when to harvest. Everything now gets into the hands of the dealer. And in many cases, it becomes a perpetual cycle, actually, right? So with this financing today, with this financing being enabled, first of all, the cost of the entire inputs came down by a good 8%. That's the first kind of win because of financing. And because the insurance being in place right now, the farmers could get out in many cases of the kind of, let's say, the perpetual alignment they had to have with the dealers earlier. Basically, these two are the biggest win for the farmers because of the insurance and financing piece.
Got it. That's phenomenal. Is there anything, Pavan, that you guys are not doing? It looks like you guys are doing like truly full stack service for the farming ecosystem. But honestly, I think on a more serious note, I think that's a great framework to think about, the needs of the farmer, right? Like, the farming problems, then access to finance and risk management, and then this market linkage, right? I think, I think we'll also start talking in those terms internally as well. That's a great way to think about it. But maybe just double clicking on farmer needs, right? And just moving continents again back to Valentina. Valentina, how do you guys incorporate the needs of the farmers, right, in your product design? And if you could just share with us, what have been the outcomes, right, of this effort of keeping the customer at the heart of your product design, right? That would be super interesting.
Yeah, sure. So I think it's important again to go back a bit to the some special characteristics of the market that we have in Mexico. So the agriculture in Mexico is very diverse, and it's more than 300 crops that are produced here. So from that fact, we understood that we have to be very agile and very adaptive with our product. So we not only we adapted the product for the sector, but we adapt the product for many crops, and even for sometimes the product is adapted depending on the buyer. So. Of the crop. So what I'm speaking here about is like we can finance different farmers of berries, but depending on whom they sell the berries, we often tailor the credit. So and here we speaking about adjusting the use of credit, like what farmer will use it for. Sometimes it's to buy the plant, little like the plant that they put in the field. Sometimes it's only seeds. Sometimes it's only irrigation system, or sometimes only greenhouse. We adjust the term of the credit, so not only to how long the crop term lasts, but also to how often the buyer pays to the farmer, so that we avoid the situation when the farmer can be found in default, right? So basically what we provide to our farmers is that they can access a credit as fast as in 72 hours, and have all the necessary capital need covered upfront the cycle. We also digitize a lot of data in the industry by working together with industry players like retail shops, buyers, insurance companies. We managed to digitize data that does not exist in the industry, And that's how we simplify significantly the process for the farmer. So the checklist that the farmer has to have is really short. The process is really agile and fast, and all that is for the farmer to feel like that we're actually like helping him, not creating him extra job. As Pavan mentioned, they have a lot of worries on their side. So from here, we try to simplify as much as possible the process. We keep always the communication like very clear. We also try to educate the farmer about the terms and conditions, explain very clearly everything that contract has. And we also have a constant follow-up during the cycle of the farmer so that we can foresee possible risks and take the measures like in advance in case there is any problem in the field or with the crop or with the with selling that crop. So basically, we allow farmer to access a credit that averages to $50,000 in a completely digital way without any collateral, with a very simple checklist, and through having these relations with the other industry players, we kind of close the circle, and we provide farmers with everything he needs. So the financing, the inputs, because we have a network of retailers that we approve, and the one that can deliver to our farmers the inputs. So we verify that these inputs are high quality, are complying with all the regulation, and we have the buyer. So we're in a constant contact with the buyer about if the farmer delivered, what was the amount, how was the quality, and when the payment is going to be made. So we accompany farmer during all the cycle, and with all the necessary like resources that he needs during the production cycle.
Got it. Got it. That's helpful. Eugenia, I think we have a question from the audience. Do we take it now or in the Q&A session towards the later half?
I mean, we can take it now just to give a little bit of
Okay.
dynamic. I will just allow, oh, you mean oh yeah, I saw from Arnold. Okay, go ahead.
No, I think from German, Vegara, I think there's a raised hand. There we go.
Yeah. Herman, you can talk.
Can you hear me?
Yeah.
Yep.
Yeah, thank you guys. Very interesting. So, I worked in banking for quite a while, and I think that the SME business started in a similar way with NBFIs or non-bank institutions who started to lend. I see many of you are lending, but one of the challenges that were faced by many SME NBFIs was the lack of a deposit base. So the fact that you always have to borrow money, and in a capital markets that are active, you can actually, book your loans and sell them to the market. But in emerging markets, that is not possible. So how are you seeing that challenge? Or or you always going to be ever relying on DFIs and things like that to actually continue supporting your growth?
Pavan, do
Can I
you want to
take
take
it?
it?
Yeah,
Yeah,
sure,
go for it.
sure. Yeah, so I think in our case, the way we don't directly lend to farmers, but we enable lending from banks to the farmers. So we have a platform which actually platform for the banks also, which caters to the needs of the banks. For example, from a lending perspective, if we understand the needs of the banks, at least the way we summarize that is that five categories, right? First of all, the ability to generate leads, of course, and then the second one is the ability to underwrite them and sift them, the good ones and the bad ones. Third one is the disbursement ability, like instead of doing a bullet payment, can we do a value at risk, right? I mean, optimize the value at risk by doing a transfer of disbursements based on the needs of the customer. The fourth part is asset management, like if they are giving a loan for shrimp, for example, who's actually managing the particular shrimp, for example, right? The asset management part. And the last one, final part, is the recovery part. So what we have done is we've created an embedded kind of ecosystem wherein all the five needs are met for the bank. So we actually manage all these needs for the banks and NBFCs. So today, using our platform, these banks and NBFCs are lending to the farmers. Now, having said that, there is also a tailwind here wherein in India, especially the banking system is mandated by the regulator to lend to priority sector, basically, right? Priority sector loans. And in here, priority sector also includes aquaculture. So effectively, there's already a need for banks and insurance companies to work with these farmers, and we have created that bridge for them to work. So given that, and because the need for all the banks already there to lend to this particular segment, we are covered in that sense, wherein we don't have to actively scout for kind of, let's say, funds or assets. Here, the banks themselves have the pressure to lend to these farmers, and that's in our situation. That's what is working well for us.
Yeah, and maybe Loy could give maybe a different context from Pavan, because we do the lending ourselves from our balance sheet and we raise from the kind of DFIs, as German said. But the way I see, especially in emerging markets, like in Africa, as you say, it is true. Like it's hard to be able to do that structure like in US and Europe. But and also, like today, like Pavan in India, they mandate the banks and maybe they are doing it. But in Africa, all the countries have a requirement to lend a next percentage to agriculture, but they don't. And there are no implications for not doing it. And even the ones which they lend is not to smallholder farmers who are the majority, but to the big farmers, commercial farmers, and even like more kind of equipments which have collateral. So farmers still don't even access that funding, despite like the government directive to lend a specific percentage to the farmers. But as German said, like for our growth, like we are lucky that we are able to get good support because of the tech that we have been able to build to manage like the credit model, the repayment, and the process. But we faced a bit of a challenge in terms of like influencing the local banks to be able to do the lending. Because in a case, they are the guys with the cheapest capital. We will never be able to match their cost of funds. But because of the risk nature of agriculture and the fear of the banks in terms of lending to agriculture, you see a very slow growth in terms of like banks being open to be able to lend. But when they have been able to see us doing ourselves, lending our own capital, like now we are seeing very positive engagement. We are already now engaging with some local banks in terms of discussing how could they be able to lend through our platform, similar to what Pavan was trying to explain.
Thanks, Ben. Thanks, Dr. Maybe, I also want to just zoom out a little bit, right? And, also talk about the non-financial aspect of things and, how fintech helps the non-financial services part of the business, move better, right? And just for context, I mean, 3 out of 4 founders here, at the heart of your businesses, there's a marketplace, a SaaS, and IoT that you guys run. So, I just want to like put some attention to that as well. Question to Ben and Avi, and starting with Ben maybe, right? And Ben, you kind of like hinted to it, but let me ask the question nonetheless, which is, both of you run marketplace platforms, right? With lending embedded in it. How does this help drive your core business fundamentals, right? The business fundamentals that you really care about, the value, the fundamentals on which your business kind of like hinges on. How does lending help? And maybe start with Ben.
Yeah, Lawyer. So the way I look at it is that the lending really helped to be able to bring everything together, right? Because you see, sometimes, especially in farming, I always see it like an equation, right? So if at all you miss one of the thing in the equation, everything breaks. So if you give the farmer the fertilizer, the high quality seeds, and you don't have insurance and there is a bad drought, everything like collapses, right? So if you give the farmer the high quality seeds, the fertilizer, the insurance, the agronomy and extension, but they can't be able to afford it and you don't have financing, then everything breaks. That farmer won't be able to achieve the intended. It's the same thing, like even if you give all of that and you don't support farmers to get good price and good markets for their products, they don't succeed. So to me, like the lending really bring everything together in terms of ensuring that you deliver customer value. Because I usually say that if you can be able to deliver the value to the farmer, and the value to the farmer is to get high quality inputs that drive their productivity up, and they're able to get better incomes at the end, that farmer will be able to succeed, they will be able to repay back, right? And I see financing really coming needed to make sure that that process is working end to end and the farmer is able to get value. And that makes like the farmers come back next season because they will really also want to get the financing again. So that is how I see it from a more market fundamental point of view.
Got it. Got it. And maybe like moving to Avi, how do you think embedding lending helps AGRIM's business fundamentals?
Right. So I think one deviation from what Ben said, which is pertinent to our businesses, lending is not a blocker to business. So I can continue to run my marketplace without having embedded lending on the platform. That is one. Is lending helpful? Absolutely, yes, it is helpful. Where do we see direct or indirect impact of that lending? In terms of direct impacts, we do see better retention of customers. You would see those customers coming to you more frequently. You would see those customers placing more orders on the platform. So I think it definitely helps with that. There is, as I was alluding to previously, there is a peripheral impact outside of AGRIM as well to this customers because we are playing a role in bringing some of these retailers into the formal lending ambit. So
Yeah.
a lot of the customers who are utilizing the embedded lending product on our platform are first time users of formal credit, and that is helping build their credit history, which would enable them to access other credit lines versus what in terms of the options that are available to them today. They either rely on offline lending. What that means is when they buy products from the distribution chain, then the distributor gives them credit, and it is not very well structured. It may or may not be available, and it may or may not be charged at a competitive rate. So all those nuances are getting solved in the longer term. And in the shorter term, as I said, it does help with retention and more buying on the platform.
That's I think that's consistent with our thesis as well, that lending really helps drive AOVs and also drives retention on the platform. So that makes tons of sense. One a question, right? And maybe like to Pavan and Valentina, feel free to chip in as well on this. We often hear from founders, as we just invest, early stage founders often think about whether to partner or build their own financial services, right? To embed it on their platform. And perhaps like this is also linked to what Herman was trying to ask, which is, like problems arising of lending out of your own balance sheet or like partnering with, off balance sheet models, right? Maybe could you just help us think about like what is the right way to think about it, right? And how does this change as you scale over a period of time?
Right. At least in our case, the first port of call was to look at partners whom we can work with in terms of enabling this financing, both from a tech perspective and from a financial product perspective too, right? I think, but that's where then the analysis was done in terms of the available products and services, like in the companies, the way they are working versus what the needs of the customers are and what we had to do in that. Now, if you look at from aquaculture perspective, right? As I mentioned, first of all, this is not a segment where it was earlier something was existing and we were trying to improve that, right? That's not the case here. Here, a new category was being created wherein kind of financing was enabled for aquaculture, which completely relied on the visibility provided by the devices, like in this case, the IoT suite, but that's there, right? So from that perspective, both the technical, for example, let's say transactional nature, etc., we could find partners. However, because we were embedding this entire thing into a model wherein there's a tripartite agreement between bank, the farmer, and AquaExchange, wherein farmer would use AquaExchange technology to kind of support the data required by the bank, right? And also there are these multiple commitments that are embedded into this. Given the nature of this kind of product structure, we did not at least find a ready-made partner that we could straight away use off the shelf, right? So because of that reason, we had to build it ourselves. However, if there was an option, we would have really loved to partner with somebody on this, both in terms of the financial products perspective or the technology suite perspective. The first guaranteed choice would have been to partner with somebody, right? It's just that in this case, it was not available for us.
Okay, that makes tons of sense. Valentina, I know you guys have, you guys have tried both models of, given that you guys are only in lending, you guys have looked at off balance, on balance. What's been the learning? What would you like to share with like aspiring founders?
Yeah, so yeah, we tried many different ways. So we started with completely being like a intermediary, let's say, between farmers and financial institutions, because we had to try the model and the score that we've developed. And that's been working for us for a while. As we started expanding the pool of financial institutions with whom we partnered, it was becoming more complicated because like the communication to the client becomes complicated because you cannot offer same conditions or the time of response. So operationally it was becoming like heavy. That's why the idea was always to migrate to to unbalanced credits and create a structured debt facility that we also did. Sometimes like we continued a mix structure for a while, doing both on balance and off balance credits. Now we almost like we do very few of balance credits, but what we are doing now is it actually, let's say, getting a credit not only from private funds, private debt funds for structured facility, but we also are getting a credit line like as Verqor for completely administrating it and giving it to farmers. So the complication was that financial institutions, when we were like intermediary between farmers and them, they decided which cases to take, which regions they wanted to finance. They also entered a lot into the process of analysis, like amount approvals. So we had very few control over the process. And that's why I think the more viable way is to get a credit line as a business and then like administrate it and give it to the farmers if the structured debt facility is not an option. So as well, it depends a bit on the market, how is the market and how is the access to the capital in the market. For example, in Mexico, the access to capital markets is quite complex. The requirements are quite complicated. So there are not so many options. Let's say we speak about markets like Brazil. There it's much easier to raise public debt. That also can be an option. So I think that's the most optimal ways to collaborate with financial institutions, because it's very hard to adapt to a pool of financial institutions and offer agility to the clients. So it's always better to have it on like a credit line or structure that facility.
I love how we have like both sides of the spectrum in this answer. And I guess like that's also a testament to the fact that these are so different markets in terms of availability of debt and the depth of the debt market. So point well taken. And I guess like a lot of it depends on which market you operate in, right? So that's helpful. I realize we have 6 minutes left for the call. So, I think would be a great time to move on to some of the questions that we have received from participants. Starting with like the questions received during registration. The first question that we have, and maybe, Ben, you can take a shot at it. It's a fairly open-ended question. It says, what is needed to achieve scale in your respective markets?
I'll try to be very brief, Loy, on it. But for our markets where you are dealing with very small farmers, like 1 acre, there is no way you achieve scale without investing in tech. Actually, the bundle that I was explaining, that is not where our innovation is, right? It is already proven when you give a bundle with everything that the farmer needs plus financing, that farmer will double or triple their production, right? And they will be able to succeed. But where we have really invested, our innovation is in the tech the infrastructure that we have been able to build. Everything on how you acquire customers, how you make the lending decisions, how you do the last mile distribution, and even how you do repayment and corrections, all through mobile money, which in any case is well penetrated in most of the countries in Africa. And that really helps you to lower the cost of transaction and make the financing of those small farmers possible. And I think that is an area where we need to continue investing in terms of bringing AI, bringing machine learning in a way that we can continue consuming different data sources in a way that we can be able to continue tightening the process. But in any case, farmers still don't have, most of them don't have smartphones. So you have to be more sophisticated in the back end, but from the front end with the farmer, they're still interacting with the technology from a featured phone. All the physical touch points, the boots on the ground, that you build software around them in a way that you make them more efficient and more scalable. So to me, I think that is one of the thing, investment in tech, but also the other one is really like over time pursuing like partnerships and processes that will be able to help us get affordable local financing. Today, you raise in dollars, you lend in local currency, you're exposed to currency challenges. And I think a way we could be able to tap to local financing, be it that working with local banks or either other kind of financial instruments that could be able to access financing in local currency that is more affordable for the customer, I think that will be very important for scale. Hopefully that is helpful.
That is very helpful. And I know we don't have time, but I would have also loved to hear Avi's take on it. I know that Avi's been, they have done a lot of investment on tech, right, Avi?
Yes, we have. So I'll try to. It's a big question, right? What is needed for scaling? But I think tech definitely would be out there. I think in our case, understanding the nuances of the business, India is a very complex and deep market. So you might have the most fantastic tech out there, but if you're unable to understand the nuances of the business, then the adoption of tech does not really work out. So that is what I would say is number two, and that spans across whether it's your suppliers, customers, logistics partners, fintech partners. I think embedded financing also has a role to play in this. And lastly, I think it's probably true for most businesses, which is the customer first sort of approach in everything that you do. So I would say if you get some or most of these pillars right, then the outcome should be more positive in terms of scaling.
Got it. That's that all aligns well with us. We don't have a lot of time. Pavan, there's a question for you, and we can be brief about it. Which is, how have you overcome community buy-in and challenges around it, given that farmers can be hard to convince?
Yeah, definitely, Dev. I think the first challenge was for farmers to get trust in technology, because earlier there have been a few false starts. So for us, that was the toughest challenge, and the way we try to solve it is, or we're forced to solve it is by just giving a very bite-sized technology. Like there was only one product with one feature which had only like a 0 1 1 result. There was nothing subjective about it, right? Everything, either it worked or it didn't work kind of model, right? When we gave such a product to the customer and they were using day in day out, and uh, thank God, at least most of the time it worked. When it worked, the trust started building in, and then they started kind of trusting us. And I always believe in this 1:3 model, where if one thing works, they give you a chance to try out another three things, right? They won't leave you for another three things. That's the expiry period. If you try more than three and fail, then you're gone again, right? So that 1:3 model, we tried to work it out, and that got the trust going. And then I think it's also, even the farming ecosystem had a need inherently. They needed kind of, let's say, somebody to help them to improve to add more value to the operations. So that also helped us. Actually, in fact, in most of the cases, it was word of the mouth, one farmer speaking to the other farmer, right? So that also helped us in that sense. But the initial challenge was overcome by just providing a bite-sized technology, which had like only a very simple 0 or 1 game. Either it worked or it didn't work. A simple model, basically.
Interesting. I think that makes sense to us as well. We have a few more questions. I know we are at time, so I think Eugenia, we can after the call, I guess we can answer some of these questions. But I want to be respectful to everyone's time. Maybe in the interest of time, I can summarize, I think, our discussion. It was super insightful. And, I would like to start summarizing by Pavan's framework of, these three buckets. And maybe I'll take two buckets here, which is farmer productivity matters. And, it's really important. And the second one is financing and risk management. From farmers productivity bucket, we have heard from Ben of how access to capital can ensure access to quality tools and inputs, which can increase productivity by 2 to 3 times. We have also heard from Pavan, some of the benchmarks around success rate of farming going up from 60 to 84%. So these are like fantastic benchmarks, which really prove why embedded finance works in the agri-tech sector. On the financing side, I think Avi gave a lot of caveat that he is not prescriptive about it, but it looks like I mean in an area where financing is not a business stopper for you or is not a necessary condition for you, it makes sense to wait till you develop some data history so that you can provide quality underwriting and availability to capital. Bill, bit of debate around build versus partner. Pavan, even though Pavan ended up building, Pavan's very clear that partnership would have helped at the start. Valentina raised a couple of interesting points, I think, which we have seen time and again in markets, that sometimes partnerships also lead to friction points, especially at the interface with customers, can lead to delays, explanation of terms and conditions, which can lead to dropouts. So that kind of incentivize, I think, Verqor to build it out themselves. And lastly, I think some benchmarks around why financing works and from an impact point of view. We have a benchmark from Avi that almost like more than 50% of his customers, the borrowers, the input retailers, are new to credit, or what we call as NTC. Also from, I think Pavan said about more than 80% of the claims were insurance policies were claimed and they were settled as well, right? Which is phenomenal in the industry. This was all great, guys. Thank you so much for taking the time out and really appreciate all the insights. Hope to do more of these in the future. Over to you, Eugenia.
Yeah, thank you so much, Dev. Thank you so much, Valentina, Ari, Ben, Pavan, for being here with us. Again, I also hope we're going to do more of those. Thank you for your knowledge, inspiration as well. On my end, I just wanted to probably share the contacts for our LinkedIn page and our website for all the audience who want to follow us and kind of connect. Same to the people who asked their questions. As we are running out of time, apologies for that, but feel free to contact me, Dev, maybe panelists as well through LinkedIn, email. We can also share the LinkedIn's in the end. So we're going to answer more targeted to your specific case. And if you're building in the agri fintech space, also there is a pitch submission on our website. So feel free to do that too. But with that, thank you so much, guys. I think for morning, evening, afternoon, it was an amazing discussion. I hope you also learned from each other as we did. Thank you so much, Dev, for moderation and perfect summarizing. I was like, oh my God, how is it you keep all those insights in your head? That was amazing. Thank you, everyone. Once again, we're going to share the recording so you can also share it along for your colleagues or someone that can be interested in this topic. So thank you once again.
Thank you, everyone. Thank you. Bye-bye.
Thank you.
Thank you. Bye-bye.
Bye.